And just like that, 2022 has come to an end. And it's been an interesting year, especially for real estate. My name is Dilyar Murat, and I'm a real estate broker here in the Greater Toronto area. And in this video, I'm going to go over the good, the bad, and the ugly of Toronto real estate market for the year of 2022. Hope you enjoy. All right, guys, let's jump right into the numbers. We're going to go over everything that happened in 2022 and what led up to it. We're going to go over some data and what it really means for home buyers, sellers, and potential investors. We're going to discuss some real estate trends, and I'm going to touch on the interest rates. And then we're going to finish off with my predictions for the year of 2023. So let's get started. Before I dive into the numbers for 2022, I want to go over briefly go over everything that led up to it, right? So March of 2020, we went into a provincial-wide lockdown because of COVID. Now, what happens is for almost 2 months, sales just plummeted, right? Everyone panicked. Everyone stayed home. People barely bought and sold. And then what happened is, Bank of Canada slashed rates to record low numbers, and everyone decided to buy real estate. So real estate, real renovation, online sales, everything skyrocketed, right? So that was a trend for the rest of 2020. Then 2021, we had a record year. It was the busiest year in the history of Toronto real estate and all surrounding areas. And Canada as a whole, really, prices went up everywhere. Number of homes, home sales went up everywhere, and even in the States, it was a very, very busy year for real estate. Then came 2022, and then we saw another record high home prices. So January, February, March of 2022 were the most expensive months in Toronto real estate history, where average prices were lingering around 1.33, 1.34. And then what happened is we got Bank of Canada decided to raise interest rates. In March of 2022, we got our first interest rate hike. It was in a small 0.25%, and then came April, we had another one. Then June, we had a big one. Then July, September, October, December. So in total, we got 7 rate hikes that added up to a total of 4%, which was very steep. And the market performed very differently in the second half of 2022. So, looking at the numbers in 2022, we had a total of 75,140 sales, and this is 38.2% less compared to 2021. Now, remember, 2021 was an outlier. So, in terms of home sales, it was by far the busiest time ever in the history of Toronto real estate. So people and experts and everyone expected 2022 to be a slower year. So there was no surprise there. But the surprise was it was extra slow, to a point where it was the slowest year in terms of home sales since 2008. And if you actually look at per capita, because our population have grown over time, it was one of the slowest years since 95 or 96. So it was a very, very slow year, okay? An average sale price we ended the year on average with $1,189,000. And if you compare this to the average price of 2021, we're actually up 8.6%. But I'm going to touch on that in the next slide. But I want to go over this peak price. So peak February price was 1.334, and then 2022 December price was $1,051,000. So that's a 21% drop from February to December, which would equate to around $282,000. In the 905, so the suburbs saw the biggest gains and the biggest appreciation during the pandemic, and they also saw the biggest drop in prices and activity after the rate hikes. Okay, when I say suburbs, I'm referring to the Bramptons, Oshawas, Whitby, Scugog, Milton, you name it. Okay, so let's look at the 2021 and 2022 numbers side by side. And I want you guys to pay attention to something very closely here, okay? So if you look at the average price of 2022, this is the number, right? This is what you're going to see in all the reports. But I'm going to tell you that this number is heavily skewed, and here's why. Because the first 3 months of the year were absolutely insane in terms of average prices. And not only that, the home sales in the first 3 months, we had about 25,000 homes sold in the first 3 months of the year, which is a third of the entire year's home sales, right? So it was high volume and average prices were a lot higher than the rest of the year. So that skewed the entire year's average home prices. Because somewhere along here, okay, this is the first quarter, somewhere over here in March, we got our first rate hike, then we had another one in May, June, July, I think September, October, and then December. We got 7 rate hikes, okay? Now, what happened is these June, July ones, I think June or July was the 1 full percentage point. There was a really steep drop in prices over here sometime. And what happened is, came July and August, prices started to flatline, okay? So on average, prices start to dip a little bit from February to March, and then March to April, and then to May, and then to June. But really came July and August, prices started to flatline. Okay, so in the last 6 months, prices kind of traded sideways. Okay, and we ended the year at $1,051,000 was average selling price for December. And if you notice, the transaction volume has dropped drastically. If you compare to 2021, we were selling really only half as many homes in these last 6 months as we did in the last 6 months of 2021. So this is something important for both buyers and sellers, because if you're a seller right now, for example, and you want to sell your house, but you haven't really seen any homes that are directly comparable to yours on the market or sold in recent memory. Maybe a lot of homes got listed and just got terminated in your neighborhood, and you just didn't see anything that sold recently. I would suggest that you look back at the statistics and the data for the last 2 years. And I understand that this is average prices for the entire GTA. And depending on where you are in GTA, these numbers could vary, okay? So I want you to look at these as a rule of thumb, but your area, and depending on what asset class you own, such as if it's a detached or a townhome or a condo apartment versus condo town, well, you're going to have different numbers. So it's not like something set in stones here, as in if you bought it this month, you've got 20% drop. It's more a rule of thumb, and you really have to dissect each neighborhood and each area differently. But if I do that, then this presentation becomes 3 hours long, right? So if you're a buyer or a seller, let's say you're a buyer and you want to offer on a house, perhaps you look at the average sale price of that area that you want to offer in, and then you compare that to the average selling prices from 2021. For example, over here is $1,051,000 in December, and we're looking at February. So depending on how you look at this data, we're trading similar to these homes that have sold in February of 2021. Okay, so in other words, depending on where you are, you can also argue that these rate hikes have wiped 2 years of real estate gains. To a point where we're trading in levels from 2 years ago, right? So whether you're a buyer or a seller, if you're worried about the market and you want to know the trends and where the prices are going, I will look at the stats for the last 2 years, and I would kind of look and see where the average prices are, what similar homes that you want to offer in, or your, whatever street your house is on. I would look at what those homes were trading in 2021, and where they were at, and perhaps they'll give you a better idea of the actual value of your home. Okay. Now, just to compare, I'm not an expert in stocks, but I just want to compare this to the stock market. Stock market also had the worst year since 2008 market crash. So S&P 500 dropped almost 20%, NASDAQ 33%, and a lot of tech companies had their revenues declined big time. And Bitcoin 65%, and 2 trillion of the crypto market cap was erased in 2022. So all had a pretty rough year there. Now it brings to my next point. I'm going to talk about the rental market briefly. So what happened is, if you look at that data that I showed you earlier, where you see, rates went up and the transaction volume has gone down, right? And then everyone starts saying, well, I thought Toronto and the GTA had a supply issue. What happened to the demand? I thought demand was so high and supply was so low, and as soon as rates went up, the demand disappeared. Well, I'm going to tell you something. The demand, yes, disappeared on the purchase side. Okay, on the buying and home sales side, it disappeared. But all those people turned into renters. Because you got to remember that real estate is a commodity, and it's real estate is shelter. Okay, there's a reason why shelter is part of our inflation calculation, is because everyone needs shelter. Not everyone needs to own a home, but people need to live in a home. So whether that be renting a home, or you own it, or you rent it, however you look at it, you need shelter. So what happened is, when rates went up and people couldn't afford to buy homes, they just rented, right? And a lot of the buyers did transition into becoming a renter. Maybe they were waiting for the market to drop, or they just can't afford the higher interest rates. Whatever their reasoning is, they just rented homes. So what happened is, on average, rent went up 20% in a single year. 20%. Average one-bedroom condo, right? If you look at one-bedroom condos in Toronto or GTA, according to Q3 numbers of 2022, one-bedroom condo, you're renting it at $2,481. Two bedrooms, $3,184 on average per month. An average three-bedroom townhouse is renting at $3,366. Now, if you're in the suburbs, like in Durham, or in some parts in the Peel region, or some parts of New York, you look at these numbers vary, right? So, for example, I live in Whitby myself. I do a ton of business here in the Durham region. So if you're looking at the townhouses here, you're renting a nice three-bedroom townhouse, anywhere from $2,900 to $3,200, and a one-bedroom condo could be as low as $2,000, right? So the numbers vary depending on where you are, but this is the average. We're going to look at the GTA condo apartment vacancy rate, and as an investor, this is very important. Okay, you want to look at the vacancy rate, because you don't only want to know what an average rent is, but you also want to know the vacancy rate, because it will greatly affect your cash flow. So Toronto being 1.9% is excellent. It's a very low vacancy rate, but I want to point out the vacancy rates in the suburbs, or Durham's, York, and Peels. These are quite a bit lower, and I'll tell you the reason why it's lower. It's because these regions don't have as many high-rise condos as Toronto, but that's changing. There's, I can speak for Durham, for example. There's a lot of condos being built in Pickering. There's a lot of projects being built in Whitby by the water, and also downtown Whitby. North Oshawa has a few projects by Universal. And some of these are being completed this year, and some of them have already been completed. Some of them will be completed in the near future. So when that's going to be all done, said and done, the vacancy rate in Durham and other regions will also go up as well, just like Toronto. It's not going to skyrocket, but it will go up from the 0.3%. Okay, so just wanted to explain as to why there's higher vacancy in Toronto than other regions. So the second part of all this is people are asking, can Bank of Canada just keep raising interest rates? The short answer is yes, if they want, and they can, because the Bank of Canada really has two objectives. A is to keep inflation under control, and B is to keep our economy out of recession or from running into recession. And quite frankly, Bank of Canada does not care that you bought a house in Toronto at the peak of the market. It doesn't matter. That's not their main objective. As bad as it sounds, they have to look at Canada as a whole, and they have to consider everything. Now, Toronto has the biggest GDP out of any city in Canada. It's the biggest city in Canada to begin with, so of course we are a very important part of this equation. But we have to remember that they look at the entire country as a whole, right? Their job is not to just only look at Toronto, and they don't make their decisions based on that. So inflation has been very high for the last couple of years for various reasons, and basically overnight lending rate here is at 4.25%. That's after the 4% hike. And you can see that during the pandemic, we were near zero. And the last time rates were this high was in 2008. Okay? But one thing you got to consider is in 2008, average home prices were $350,000 or $360,000. Right now, the home price is 3 to 3.5 times that. So, yes, historically speaking, recently we've been blessed with low rates, and historically rates have been higher, but prices haven't never been this high. Okay, homes are extremely, extremely expensive right now, and affordability is an all-time low. So when home prices are, average prices at $1 million or 1.1 million, 1/4% or 0.5 percentage point is going to have a very different effect than if the average prices were 200,000. Okay, so we're not, and in 2022 we had 4% rate hike. So only you could imagine how big of a difference, how big of a damage that did, and we can see that in average home prices, right? So just to keep that in mind when people are saying things like, oh, the rates aren't even that bad, or we've seen higher rates. Well, but you've never seen prices this high. So, and I just wanted to add these two pieces here. These are both from articles. If you guys want to fact check them, I can send them to you, the link directly. Tiff Macklem is our governor of Canada, governor of Bank of Canada, and he basically said that interest rates are very low, and they're going to be low for a long time. He said this when the pandemic first started in July 15 of 2020. He said, if you got a mortgage, or if you're considering making a major purchase or a business, you can be confident rates will be low for a very long time. Okay, for a very long time. Remember, this was 2020, July 15th. Now, in 2021, December 22nd, so pretty much a year ago, Doug Porter, the chief economist from BMO, came out and said, oh, I don't think Bank of Canada is going to raise rates that much. I think they're going to raise rates maybe 5 times this year at most, if not 3 times. Okay, he literally said, based on events, I suspect that markets are somewhat overestimating how much the Bank of Canada will do, but I think it's reasonable to expect 3 rate hikes, taking the overnight rate to 1%. Overnight rate today is at 4.25%, so he was way off. Now, I'm only showing you this because I want you, from moving forward, every time you see anything on news headlines, any experts or analysts saying anything, I want you to take it at face value, and I want you to do your own research so you can come to your own conclusions. You cannot blindly trust an expert because people are wrong sometimes. Sometimes the analysts are wrong, and not just in real estate, in everything else as well. And this just goes to show you that just judging, if you're making a financial decision, just judging them based on one article or just that one person that who told you something, then you're gonna, when things go south, then you would be the one who's getting hurt, right? So I would recommend you read as much as you can, and whether you think the Toronto real estate market is going to crash, I respect your opinion. I'm not saying you're right or wrong, but perhaps listen to people and maybe hear people out who think that Toronto real estate is going to do good. And if you're on the other side who thinks, Toronto real estate is going to go to the moon, perhaps, listen to other people's opinion as to why Toronto real estate is going to crash. That way, when you listen to opposing views, it's going to give you a bird's eye view, and you can really see, and you can really look at the market from a different perspective, as opposed to just have one vision, and you can be just blindsided, right? So I think that's very important. Here are the two major pandemic trends that applies to real estate. We've seen two very major pandemic trends that contributed to a lot of things that have happened in the GTA market here. So number one was work from home. And I think this was a universal thing in all over North America. But how this affected the GTA market is, in the beginning of the pandemic, companies offered workers to work from home, to have the option from working from home. And there were a lot of remote jobs, so a lot of people sometimes move out of town. I know a ton of people that moved to Alberta, for example, or they just decided to move to smaller cities or move to bigger spaces for home office, right? And that's changing right now. Companies are actually demanding workers to be back in the office, and even government workers are mandated to return to the office a couple of times a week. And this is changing, and a lot of the offices are in city cores, and the reason why is employers are, and you can read about this as well, but employers are cutting costs, right? So you're seeing a lot more layoffs happening. For example, in the tech sector, in the last quarter of 2022, there's like 155,000 jobs cut in the States. In the tech sector alone, and then I think Amazon just had some layoff a couple of days ago. So we're going to see this trend in 2023, where tech companies are cutting people, cutting workers, and they're demanding workers to be back in the office. And so you have to meet the demand, or you're going to have to find a different job, right? So people are following, and they're going to be going back in the office. So I think this whole working from home, it's still going to exist, but we're going to see a lot more people returning to the office, which brings to my second point, moving to suburbs. Moving to suburb was another thing that was a very hot topic during the pandemic, because a lot of people were working from home. And what happened was, during the pandemic, especially here in the GTA, restaurants were shut down. There was no entertainment. Movie theaters were shut down, bars, clubs, you name it, right? Gyms, you couldn't do anything during the pandemic. So what happened was people got stuck in their 30-story condo buildings, and they couldn't do anything, so they thought, let's move to the suburbs. So we saw this surge in people, in numbers of people who moved out to the suburbs. But now that they realize they have to go back in the city to work, they realize that now city has opened up. They can enjoy their lives again. They can go to concerts. They can go to sporting events, and things have gone back to normal. People want to be back in the city now. So what happened? People started moving back into the city, and the general market also played a factor. But the buyer sentiment has changed, and so there's a loss of interest for the suburbs now. And I think that's another major thing that has changed, and that contributes one of the reasons why that the suburbs took a bigger hit after the rate hikes, is that when prices become somewhat more affordable, people are like, well, if you can buy something closer to the city, why do we have to go so far out, right? So that's another big thing that's changed. So my predictions for 2023, I want to get right in to it. First thing first, I think there will be one or two more rate hikes, totaling 0.5 to 0.75%. Because inflation, I don't think we're going to get back to. Bank of Canada's goal is to get the inflation back to the 2% mark, which is what it was pre-pandemic. Right now we're sitting at in the sixes, right? 6.5, around 7% mark. I don't think we're going to get there anytime soon. And the States is higher even, so they're going to keep raising their rates, and I think we're going to follow suit. But I do think we're at towards the end of the rate hike cycle. But I think we're going to have one or two more rate hikes, and we'll be done by April of 2023. And once rate hikes stop, I think we're going to see buyers present themselves and trying to get back into the market, right? So, and prediction number 2, home prices will fall 5 to 10%. Now, I think the rural properties will take a hit this year. I think rural properties took appreciation in rural properties was massive throughout the pandemic because people wanted land, people wanted to move up there and do all this stuff. But now that things are becoming more and more normal in the city, I think people want to be closer to the city. And also the prices have come down enough in the city or in the major urban areas that people want to be moving and buying in those areas. And they didn't have to go far out to get a deal, so to speak, right? So I think the rural properties will take a bigger hit. And also condo prices will take a big hit. If you notice right now, downtown Toronto, as of today, which is January 6th to January 7th, downtown Toronto has about 4 months of inventory, which is very high for downtown Toronto. At least highest in the last couple of years, with the exception to during COVID, right? And the reason why is investors. You got to realize that downtown condos in Toronto, or just high-rise condos in general, are typically very investor heavy. So they're owned by investors, and they usually get rented out to students, workers, etc., etc., right? But what happened now is that because mortgage rates are so high, these condos, not only are they not cash flowing, but they're bleeding too much money. And rates are too high. Rental rates isn't enough to cover it once you consider the condo fees and property taxes and so on and so forth. And they become less attractive. So people are steering away from condos, or just dumping their condos or offloading them because carrying them is becoming too expensive with the interest rate hikes, which is different than, let's say, a duplex or a house where you can convert the basement into a secondary unit and have 2 incomes come from it, right? But you don't have that option in condos. Certain buildings allow Airbnbs, and those buildings are doing okay. Average, right? Depending on how you look at it. But I think those buildings that don't allow Airbnb, and if you're just relying on monthly rental income, then it will be tough with these rates. And number 3, so I think to wrap up my point, I think the 5 to 10% price drop is going to come mostly from the condo prices and rural properties. Number 3, recession. I think it's inevitable if sorry, tongue-tied. Inevitable. If you're not in a recession already, I think we're going to be in a recession in 2023. 2 negative quarters of 2 negative GDP quarters, and we're going to be in a recession. I think we will announce that we're in a recession probably sometime in the third quarter, so maybe like July, August. We're going to announce that we're in a recession. And typically, when recession happens, rate cuts happen, but I don't think we're going to see rate cuts until 2024. I think we're just going to hold off on the rate cut and just see how the rest of the year plays out, and then we're going to do a rate cut in early 2024. So, but there will be, I think there will be a recession, or a mild one at least. Number 4. There's going to be 80 to 85,000 home sales in 2023. That's about 10 to 15% more than the 2022 numbers. And because I believe that buyer confidence will come back in 2023, because there's not going to be as many rate hikes, and market becomes a little bit more stable. But I do think in the first 6 months of 2023 is going to be very, very slow. That's because buyers are still going to be try to get a deal. They still think we haven't hit the bottom, or they think the prices will drop further, so they maybe hold off. And sellers, on the other hand, may think that we've already hit the bottom, so they don't want to sell in the at the bottom. Rather, they want to hold off until prices come back up, right? So it might be a battle between the two. One doesn't want to sell, one doesn't want to buy, kind of like the last 6 months of 2022. And I think the first at least 4 to 6 months of this year is going to be very much the same. And then the second half, we'll see the activity pick up. So those are my predictions, and those are my thoughts for 2023. Let me know what you guys think. If you have any questions regarding specific neighborhoods or areas, feel free to email me at hello@dilyarmurat.com. I put my Instagram handle here as well. You can just book a meeting with me with the link below directly. If you have any questions, let me know. If you have any questions about the presentation, message me and I'll be happy to answer any of your questions. Thanks again for tuning in, and hope you guys have a great 2023. Cheers.